What's up, everybody? It's Emperor with BRT, one of the admins. This is week 10, technically week 16. We've had some breaks. He's had a vacation. I had a vacation. Whatever the case is, this week 10. And it's the final week before we start our small count challenge. We technically started it today. Um, but yeah, we're gonna do the small count, which means $250 goal. Um, Four max trades, $150 stop loss, max stop loss, two red trades, max stop loss or lockout. Toad's gonna follow along. We're gonna see how his progress has been in the last couple of weeks. See if he's got any payouts. See if this has even helped, right? There's some people have gone through this and it's helped them a lot. They've been getting consistent. Some people just continue doing their own thing. But the whole process of this was to teach Toad how to create a strategy, how to follow a strategy, how to create rules, how to create a scale plan. We also did psychology because that's the next step up is a more advanced psychology, right? What do you do when the prior day was a full red, like yesterday or the day before yesterday, right? How do you trade when it's at all-time highs? How do you trade when there's a full body green? And that's when you start to get more advanced. Once you prove yourself that you can be consistent, you can have consistent trades, you can have follow your rules, not break your rules. Uh, I think a lot of the things that lead to you breaking your rules are your emotions, right? Whether you were mad, happy, sad, fear, FOMO, revenge trading, anger, whatever it is, something got in the way of you making the right decision. And usually it's some sort of emotion, whether it's greed, sometimes you're $10 from hitting your daily goal and you decide to take that last fifth trade and you're like, this is my grade A setup. You get in and right away it goes against you. Sometimes after having a nice streak of a few days, uh, a few trades where you take three, you took 3 to 4 green trades and you feel like you can get that last $10 or the last $50 to hit your daily goal. And the confidence or the euphoria of your last three trades blocked you or made you tunnel vision and you locked in and you didn't see the bigger trend or the macro trend of the day. And then you decide to counter trend trade it and it blows up in your face and you give some money back. It happens to all of us. Don't blame yourself. Don't beat yourself up. Learn how to get out of that cycle. You don't want to get stuck on that revenge trading cycle or that loop, right? Because sometimes when you go for that last $10, you enter your trade and then you get in your trade, it goes for you for a couple of points and then it starts coming back against you. And then you start getting fear, and then you go from fear to hope, and then you go from hope to praying that it comes back to your level, and it's all bad. Once you get to the praying to come back to your level stage, you need to get the fuck out of your trade. Get out of your trade. Don't keep trading. After that, go take a 15, 20 an hour break to reset. Because if you don't reset, you're gonna come back and you're gonna get stuck in that same loop again. So hopefully, without further ado, let's get into it. Let's hope all these tips and tricks that we taught Toad has helped him. So Toad, first question, has this process helped you?
Definitely. I think the first time I went
Yeah,
through it, I think didn't we didn't listen to the process. And now that I actually followed it, yeah, definitely. I think all the steps help psychologically. I mean, you're recording the wins and losses each week and reviewing that. It's like if it's not good, it shows you something you need to pay attention to get good. And if it is good, it gives you confidence. So 100% help there.
Awesome. Glad to hear that. Is that, like I said earlier, a lot of people follow the steps and create a system, and then you're the one that's done it twice. You said the first time it didn't work. Um, I could
I
I could say that it probably I was in the same loop, right? Where I
Yeah.
would when I first started this, when we like 2 or 3 years ago, I was just creating systems. I was just reading business books on how to create systems. I think Ray Dalio was one of the ones that gave me that feedback loop. And I was like, okay, that seems reasonable, right? The feedback loop. The only way that you'll be able to change or correct any issues with your trading is having a good feedback loop. What's a feedback loop, right? You identify your issue, right? And we help you identify your issue. And then the
hmm
second part is taking that feedback and reviewing it. And then third, or reviewing it and then telling yourself or writing down or whatever how you're going to fix that issue. Whether it's using a fib, whether it's using moving averages, whether you're using break of structure, fair value gap, ICT model, moving averages, or um, and then the last step is actually taking action on those steps that you identify that you're going to correct that issue, right? So if you get in on a trade when it's no break of structure, or when there's break of structure on the 1 minute, but no confirmation on the 5 minute for the break of structure, then you're probably going to get scammed out, right?
hmm
Because you're not waiting for stuff. And then what you're going to do next time, you're going to wait until you get 1 minute break of structure, which is 1 minute break of structure should be your signal to start looking, not to get in a trade, but to start looking at your levels or at Brandon's levels, right? You start looking for those levels. Okay, we got break of structure on the 1 minute. 5 minute, we have no break of structure. Okay, let me wait for that. And before I even get in, once I get confirmation of break of structure on the 5 minute, now the sequence can begin to develop. If you're going long after the break of structure, you want to see a higher low. If you're going short after you see break of structure, you want to see a lower high.
hmm
And then start evaluating and then looking for trend and stuff like that around your levels, right? That's that's something that comes with screen time and just experience. Another thing is watching the candles develop around your level, right? 'Cause that's another one big tip that's helped me is okay, do I get in when it tags my level? Do I get in, if it slips my level and comes back up and breaks through my level? Do I get in if the bodies are holding above my level? There's all kinds of different ways to get in the trade. And that's all gonna depend on what type of trader you are. Like I've said it this whole time, you, me, all these other members can all have the same strategy from Brandon, but we're all gonna have different perspectives on how we get in or
Right.
how, because that just comes from experience. Sometimes I'll get in a trade. You guys ask me, hey, why'd you get in that trade? It's just it's just the way that I seen the candle develop on that level, right? Oh, I thought you said you looked like this. Well, so you have to be able to adapt to the market. You can't be set in stone. At tax my level, I'm getting in, right? You have to be able to adapt. Sometimes it's high volatility. Sometimes price action will slip that level and then come back above it and then hold above it and then you can get it, right? But you
Right.
have to be able to adapt. Your strategy now could be way different 3 years from now because we're just in a different type of market. And we've seen it with Brandon where he releases a lesson on fibs or gaps or algos, and next thing you know, that shit doesn't work. That just proves that you need to be adaptable to the way the market flows.
Yeah.
Sometimes fibs, sometimes fibs will work. Sometimes moving averages will work. Sometimes ICT will work, right? But if you studied all these different strategies like I have with different traders trading different systems and me learning from them, is the times that the best trades happen is when the ICT lines up with the fib, lines up with the moving averages. When multiple strategies line up on a certain level, that trade right there will probably have a 90 to 97% success rate. And that's just the way it is. But a lot of people hate on each other's strategies. They're like, fuck ICT, that shit don't work. Fuck moving averages. Fuck RSI, MACD. Those are lagging indicators. And don't hate on the game. Just learn how to play the game, right? And it's whatever helps you. This whole thing is what we found out what helped you make better trades, whether it's break a structure, your moving averages, your anchors, your RSI, your MACD. We showed you, or we all learned how to use them together with your strategy. So without further ado, let's jump into it. And
Absolutely.
congrats on sticking with it. A lot of people either they don't learn or they don't use the system or use the system to create their own system and strategy. And that's
Yeah.
what this whole thing was teaching you how to create your standard operating procedures for your strategy.
Yeah. I mean, it has been a journey. I mean, it has been, I mean, I first came into BRT in November of, I think, 2023, was it? Something like that. Or was it 2024? I think it was, no,
Yeah, probably 2023.
I think so. I think it's been like, yeah, a year and a half, you know? I mean, I'd say it's funny. I think I mean, definitely, I think going through this, finally making the proper standard operating procedure, looking at what I want to see in my trade. Uh, I mean, specific was ultimately like I thought like, oh, it's gonna be so restrictive, but ultimately, I mean, it came boiled down to five things: um, structure, RSI, MACD, moving averages. I forget what my number five was. Pretty sure actually it was multiple in 1 minute and 5 minute structure. Um, and yeah, I mean it's definitely is quite, but I mean it was hard as hell. I mean it's still, it's I mean I guess never really have it, it's everyday thing. Um, but yeah, I mean definitely a lot of studying.
Yeah, that'll be a continuing battle because and now you're gonna go from getting payouts to having a green streak, right? For 10-day, 12-day, 20-day green streak. And then you're gonna run into the issue or problem where you're like, fuck yeah, I got 10 days straight. You're confident. Next thing you know, you get in a trade that you shouldn't have been in, but you think it's grade A setup. And that's the euphoria or the overconfidence building up and blinding you from actually looking at the chart like you should, like you
Right.
normally would, right? You're like, yeah, I got this. That's just the cycle that all traders go through. Once you get to that point, you can hit me up or whatever. I'll show you how to fix it. And then once you get past that, your consistency is right there within reach.
Yeah. Yeah, it was
Yeah.
definitely largely the emotions. I mean, Brandon says it all the time. A monkey can perform technical analysis.
Yep.
You have to. So I would say really is really like almost 6 months in, I could have made money, but it took a whole year to get over myself emotionally.
And
Uh,
that's the biggest battle is like human emotions. That's when errors are made. If you can learn to trade like a robot, you'll be consistent.
yeah, absolutely. But yeah, let's get into these trades. These are the trades I made the week. I took, I think, two payouts or something. I had two accounts. I took one from each. Um, and this is that week. So I got into a short up here. This was all the way around 2 p.m. On what, the 21st. So we got a little dip. The top right, top left here is the 15 minute. You got the hour on the top right, 2 minute on the bottom right, 5 minute bottom left. So 15 minute, we got a fresh low in the morning, which ultimately just squeezed out big time. Um, a lot of some downward right consolidation, which ultimately popped out and came back up to the high, and then didn't get past the high. I mean, we had 5, 10, 15, nearly 25 minute candles in a row that were pretty much consolidating. So that was all the way from like 12, 1 p.m. because 20, there's 12 in an hour. So like an hour and a half of consolidation. Um, and we did have it was a structure up, and then we kind of started making structure down. We broke and had bullish structure again. But the 5 minute RSI had finally gotten kind of under the 50. It was kind of bouncing around there. The 2 minute MACD, it's like kind of cut off here. But you can see its downside came
Hmm.
all the way below the 30 on the 2 minute. But I'm mostly looking at the 5 minute. The 5 minute is also a little hard to see, but it is in a downside cross. And even the 15 minute got this little downside cross here, you can see. Um, hopefully. And so then yeah, I got into short here. I'd call this a grade B. I was in on two accounts, or no, three accounts, and I was only in two micros. Um, because I mean, yeah, is it? I mean, I wanted to. I did have all these things going, but ultimately my EMAs were still up, which I use these as like a guidelines. I'm not really too big on looking for their exact levels or exact crosses and stuff. But those are still upside, but all those MACDs and RSI stuff can't really fight the fact that we have a giant squeeze up, but it is kind of rejecting off the 100. So ultimately, I got into a short here. Um, and then I ended up, it started going in my favor and started rolling. So then I was in two, and then I added five more once it started getting down. I didn't exactly love the problem. So this ad here was all right, but actually what I wanted to add on was all the way up here on the close of this 15, maybe on the close of one of these fives. So kind of a late ad here, but I was thinking I can at least get down into here because we started rolling. It's likely to retest those. So then,
I have a question
oh yeah,
for adding. Is there a particular way you add?
yeah. So I mean, that's part of. I mean, a lot of kind of facts of how I'm feeling about it. I've realized, and part of my keeping size so small and emotional stuff was I'm really largely discretionary. I mean, I think kind of almost everyone is, unless they have an algorithm. Discretionary
Hmm.
and intuitive. So I mean, I'm usually getting in 1, 2, 3 around my area if I think I'm starting to see a momentum swap. And then if I see something that I really think will trigger momentum in my direction, I'm thinking like this one. I'm thinking, what's the chance that it'll come all the way back? Because I'm looking for about like 10 micros max, 9, 10, something around there. So I got in only two. So I'm like, okay, I can add some here. And then if it comes all the way back up, I can maybe add back a few more with a stop above the highs, is like my add on a win. And then if it's adding just like so if this one started going against me, instead of adding down here, right, I probably would have added a bit up here. And then one thing I'm looking to do if I'm ever adding on something that's coming against me, just because I'm in a starter. And I mean, I'm looking at the 15-minute and the 60-minute often in trades. Like I will if I'm gonna really, there's one setup I have that I've for a short that I've got pretty high conviction on, but the zone of entry can be like 30 points.
Hmm.
So I'll get in two and then I'll get in two more and then I'll get in like two, three, four more. And basically the protocol there for me is as soon as it comes back down to my entry, I'm getting out half at least. So I'm kind of it's kind of a management that I learned from watching Brandon. I remember he said, it goes away from you start one, get in another one, get in two more, get in four more, and you have to take those off when it comes back near your entry. Is I remember him, I very clearly remember him saying that at some point. So I do that, and that's basically it. If I'm adding on a winner, I add on something. I put my new line in the sand based on that. So I my first was here,
Hmm.
and then I saw this come down here, this 2-minute candle, and this 2-minute candle is this 5-minute here, and I saw it made kind of a bullish hammer. Um, and then the doji and all that. And then this 2 minutes. So then my new line in the sand essentially is like somewhere around here.
Yep.
Where if it starts coming back up there, I'm looking to just get out. So that's how I add on winners. I'm looking for the momentum to sweep and follow through. And if I'm,
See that entry right there? Like,
yeah,
uh,
this one,
can you zoom in again? Yeah.
yeah, yeah.
So just how we use structure for support and resistance. Look at structure as resistance, right? Because you entered here and you want to stay in sequence, right? So if you're up here, you come down and you're like, oh fuck. And and I really never add. The only time I average down, I never average up. But I've learned a way that you can average up and still be safe, right? If price action is in sequence. So you entered here, we got a lower high because we got the high over here. Got a lower high, a lower low, and then a lower high, right? So you entered on the lower high. And as long as we're still in sequence, it's okay to add, right? Because you're still with the momentum down. But if you look at this little line right here, so you got the lower high where you entered, and then you got the lower low where it kind of started bouncing against you. Now, this would be my add point would be right here. And these two candles because of this resistance right here. Worst
Yeah.
case, this resistance, right? Because once price action goes, remember what I always say, look at the 50% of the wicks. So that's where I would expect for a lower high to be formed sometime later. It can be support, like it was support right here. See how it was support? But then it becomes resistance. So it comes into it and it should be resistance. And I mean, you entered fine, right? But I probably would have entered either at the tag of that level or hold of that level. And then if it doesn't, it creates a lower high, like a nice little structure. I would enter here, worst case.
Uh-huh. Yeah, no, I can definitely appreciate that, and I can because you're right. I mean, these entries are very different. This entry I'm adding at the top of a green candle along this on this one I'm entering at the close of a red candle. So really getting adding at the top of this green would have been way better.
Yep. Yep. Because I mean, if you, yeah, it's kind of towards the bottom, and this shit can fucking rip up, right? Because it's a falling wedge or
Right.
whatever it is, whatever, right? So it's always good if you're going short. to add on lower highs instead of at the lower low of it because this
Yeah.
could easily went this way.
Yeah.
Just to
Yeah, it's something I'll
something
definitely
to look out for.
I'll think about it because it's I think there part of my edge in my mind is definitely some sort of I can scope out which candles look like they are about to start the leg.
Yep.
And I can catch a whole leg risking just a candle.
Hmm.
Like there's definitely something about that. I don't like I can look through all my screenshots and I can understand it, but I don't really know how to put it on paper. It's just there's definitely some like buying all the way at the top of this green candle on the close because it looks like it closed all the way over this one. And then risking just a little bit sort of thing, getting back in like I don't so I'm gonna think about it and try to see what I can do to do both um without getting confused.
Yeah, definitely. I'm not telling you to pitch it of just maybe something that can help you get a better entry.
Definitely. I mean, I will have to keep getting better. The market will get harder. So
Yep.
so yeah, adding on the momentum there, and then actually this went and I have an auto liquidation on my account for profit. Um this like got me to I forget what it was. It was either to pass the eval or to get over my buffer or to get a payout I wanted or something. So I had like I had taken a morning trade, which that screenshot I didn't have proper screenshot of it, so I didn't recap it here, but that was a win. And then this carried me into that. So I guess it auto liquidated me here. So I got out, but then I took a screenshot later and it did after cracking this level, then went to go ahead and continue on to I mean, I had targets of I had shy fib targets. It looked like to me that this 15-minute fib I had was active. So that fib, those fib lines are this red, this gold, this purple. Um, it looked like to me that was active. It hit this red and bounced, came back down here and tested this. It did blow through these, but it gave no signal of any sort. So I wanted to kind of shy these and see what I could do there. Um, it did tap this and it would have hit this second target. But anyway, and then it got near 4 p.m., so I would have closed out regardless. So yeah, that's the first one there.
Nice.
Um, entry, momentum add, all that. Three micros and then seven. Um, total of seven. Um, this is a what? Oh, this is all the way in the morning on I don't even know what day this is. All right. But, 5 minutes still here, 15-minute here. We got a structure breakdown here. We got RSI breaking under the 50. The MACD's down 15 minutes actually in a negative cross. Looks kind of similar to the last one, but didn't have a crazy big pump. Um, and then this one, I just thought that like this right here, this 15-minute looked bullish to me. I was kind of worried about the hourly blasting up, but I was like, I think we're gonna pull back down toward this purple line is the midpoint of the whole day. So you got, this was here about 7 a.m. We had the overnight high and the overnight low, you know what I mean?
Hmm.
And then this is the midpoint. I was like, I think we're gonna come back down towards that, is my point. I was like, I think this fib's active. This is another 15-minute fib. I'm pretty sure this one is active because we're getting perfect tags on these gold levels. I was like, I think we're gonna come back. We shied this. I was like, I think we're gonna come back down here maybe, but at least towards the midpoint. So I got in, this was again three accounts, and I got in a total of 10 here. I think it was like five here. Yeah, five here and five here because it's right in the middle. Um, so I got in that, started flushing, and then I didn't take an exact note on why I did this, but I guess I started getting a little scared or something because I've like out. I'm out like half of them before it even comes back down,
Hmm.
before it even comes down to my targets. I don't know what's exactly up with that. And then it started rolling back up a little bit, so I closed out the rest. And then here's the final screenshot. It went and hit literally all my targets. So I don't know why I got all. I guess maybe the size was a little too much. I guess I had been doing like, 5, 6, 7, around 8, trying 9 max, 10 max. So maybe the size got to me here because this made way less money than it should have in my plan.
Yeah.
So
And that's a lot of things that new traders battle through is when you're scaling up, you're not used to the either the red P&L or the green P&L, and it's like, whoa, your heart rate goes up, you start sweating, your palms are sweaty, start getting nervous. And I think that has to do a lot with over leveraging, especially when you're not used to it. Uh, but I mean,
yeah,
your plan worked out good, and maybe next time because you got lower highs still and lower lows. So not until that sequence was broken would I had gotten out.
yeah.
Uh, because is this what this is a 5 minute right here.
This is a 5 minute down
Can
here.
you
Yeah,
zoom in a little bit?
yeah.
Yeah, see, um,
There you go.
so you got in here and then you start getting out there.
Yeah, my targets. I can catch more of the structure to the left here. Now you will want to look at that.
Yeah, because I was gonna
Um,
say you could these first ones are not bad because you
yeah,
had this structure here, right? But you should have let some ride at least to here and then possibly then down way down here.
yep. Yeah, and it's like ultimately, I had this gold is a fib level. These white are just that's just a structure line for me. And then the purple's that midpoint. So like I said, my target was at least down to the midpoint. I mean, I got the fib
Yeah.
level, like you said, that
Yep.
structure here, this structure here. I mean, and then I had the ultimate target of this red fib level,
Yep.
which lined up with my 200 EMA, which is again just I just look at
Yeah.
that for general direction. Although they do be bouncing pretty good. I mean, that's the 5 minute 200. That bounced pretty good. The 15 got this little kind of ugly triple bottom, but yeah, man, I mean, no structure was broken up to get me out of that trade. Sure, getting out of like half of it, you know what I mean? But there was no reason. And this is the emotion, the intuition, the discretion, because me in a better mindset, I don't know, maybe I was scared about the size, whatever, maybe I don't know, didn't get enough sleep, I don't know, but in a better mindset, definitely could have seen myself taking some out, re-adding and catching this whole thing, So something to think about there. Watch the structure, don't keep my, don't get too scared.
Yeah, like I think if you're over leveraged, especially that's what I love about micros is you can okay, so let's say you entered here, then you added another 5 or 6 down here is okay, let me lock in 75, maybe 50% right here because that's a good one, right? Because you got this as support and this as a squeeze point. So yeah, a squeeze can go up to here and then come back down, right? But I think what you felt a little bit nervous because like I said, you were probably over leveraged. But with micros, is okay. Let me lock in 5 contracts here and let some ride. Okay, we're still in a lower high. All right, cool. We didn't break structure. We broke that. Perfect. Cool. Now you're at your second target right here. And now maybe once it hits this line right here, lock in another 2 or 3. So if you started with if you were in the trade with 10 and you locked in 5 here, and then you're not as over leveraged and you're like, oh, okay, I could deal with that. And then you see another lower high and then let another 2 ride all the way to your target here or down here.
Hmm.
Because you can undo the over leverage so you can feel a little bit more comfortable with the P&L that you're seeing on the screen. That or just remove the P&L and just be like, okay, as long as we're with structure, as long as we're still in sequence, I'm staying in. Those are the two things you should be telling yourself. Okay, where can it bounce? Of course, if you enter there, you got to start asking yourself, where can it bounce? Okay, it can bounce right here, it can bounce right here, and it can bounce right here. Where's the highly likelihood of bouncing right here? Because we have two spots here, right? And then we got the moving average right there. So that
Mhm.
can be a bounce, but okay, if it bounces there, what do I gotta look for? I gotta look for a continuation that it's still in sequence down. So we still got a lower high, lower high, lower high. I'm not getting nervous. Okay, once it breaks this, right? If this were to break that, then I'd probably stop out. But probably stop out down here, right? Because it's gonna pull back, confirm, and then go back up.
Uh-huh. Yeah.
So I mean, it's a good trade. You had a good trade plan. I think your emotions and the over leverage kind of set you off to not make uh it as good a trade as it could have been. Because
Yep.
your plan was there.
Yep.
And that's something that a lot of new traders trade with. And like as soon as it starts going against them, they're like they already got their finger on the trigger ready to get out. And they're like, no, don't start getting nervous or fearful until it breaks structure back up.
Yep.
Because as long as it's still in sequence down, you're still in trend. You're
Yeah.
still going down. Don't get nervous and still starts breaking. And maybe jump onto the 1 minute or 30 second. I never really traded 30 second, but I'm sure it signals something. But
Yeah. I've been looking at it recently on I have my five serious accounts and then I've got one that's like a bit of a YOLO account, right? You gotta say I've read in meditation, if you can't keep your focus on the breath, try to at least keep it in the body. So if
nice.
I can't stop myself from YOLOing, I can at least just do it in a cheap $50 account.
Yep.
So I actually my method on that account, they've got $1,000 payout limit and you need 5 winning days and there's no consistency, but you need 5 winning days. So I'll just YOLO it. And then for the rest of the 4 days, I just trade micros. Like if it's a win, if I make $1,000, 15 to boom, payout secured.
Yeah.
Now
Uh,
just on to the micros.
yeah, I'm glad you mentioned that because that's something that I sometimes do is I'll hit my daily goal and then I'll just keep trading, but I'll trade sim, right?
Yeah.
Because I just want to keep practicing, practicing, practicing.
Hmm.
And when I'm practicing exactly how I'm trading. I'm not trying to be like, oh yeah, I'm gonna go in 10 contracts right here so I can fucking get $1,000 or $10,000, whatever it is.
Yeah.
You have to when you're dropping down and you're still continuing to trade, you need to either jump to sim or micros and like the bare minimum micros, like one or two, maybe three max. Because I
Yep.
mean, three can still do some damage.
Oh yeah. Yeah, if you catch the trend. And then another purpose of it I have is since on that account, sometimes I'm just trading one single NQ,
Uh-huh.
which ultimately is like pretty similar risk to my 9, 10 max micros.
Yep,
So it's kind of like, you have to push yourself out of the comfortability zone to grow. So I'm like
yep.
trying to make myself more comfortable with risk, trying to not just stop out emotionally, but wait for it. I kind of trying to mentally be like, this trade is dead. Now let's wait for the best to exit.
Yep.
So, and also practicing my runner management. Because if I only have one NQ, I want to get close to my target. I don't want to stop out completely shy of my target. I want to let it blast through my target if it wants to, but I don't want to let it come all the way back to me or anything like that. So I think it's also a lot of practice with the runner
It
because
is.
it's easy to take,
What's that?
it's easy to take profit when you got a bunch of micros.
Yeah. Yeah.
So
And you're gonna have once you're once you're ready to make the leap to minis, you're gonna have to kind of retrain yourself, that emotional retrain, because remember, $50 on one M. on one MNQ is $500 on NQ.
Yeah.
So it's 10 times more. And when you start seeing the green, even if you're like, it used to take you three trades on MNQ to hit 500. And on NQ, it's one trade. You hit 500, you're like, oh shit, I'm already done.
Yep.
And then you have to be able to be like, I hit my goal on NQ. I am done. I am done. That counts locked out. Maybe do what Brandon says, set up a lockout. Once you hit your profit target or your daily goal, lock it out till the next day.
Yeah.
Because sometimes new traders will be like, yeah, I hit my 500. Maybe come back for power. Maybe I could get another 500, get $1,000, and then there goes your $500 you had from the beginning.
hmm And then if you got rage trading problems, there goes another $500 trying to make it back.
Yep, yep.
Yep, no
So
doubt.
just be careful.
Yeah, and I've noticed on the on that account that I usually trade one NQ, I went and traded two, something like that. I got in and then I got into another one and all of my psychological management just went out the window. All of a sudden I was down 30 points on two NQ and I was like, this was not the plan, um but I was in that account that is basically my like trying to push the envelope. So it's kind of like because on those five, accounts I'm taking very seriously, I don't go over ever I don't use NQ at all. So, but one day I will. So, um, yeah, it's just funny you mentioned that because for sure on NQ, it's like trying to move up to that. I can already see it with what I'm doing in this account
Yep.
or that one.
You always want to
So,
create good habits before taking the big risk
yeah.
because those habits will help you when you have the
Yep.
when you're in the minis.
Yep.
As if you still have bad habits, either of bag holding, of getting in a bad entry, or chasing, or anything, do not go to the minis. You're not ready for that. You're not
Yeah.
ready.
Yeah.
And you're looking to blow up your account in a day or two if you got bad habits.
Yep. Okay, so then after that short, I got into a long. Um, I got into a starter long of just one. So I guess this is going to be an example of how I add non when it's not like just a momentum going in my favor. I got a one on two accounts is in one micro, and this was just all the way down near that 161, that 15-minute 161 on my prior trade. Right. We had gold to the gold, back to the red. So I was like, all right, like that can plus the 15-minute like 200 little area. This VP node. I was like, okay, I'll get into one here and perhaps we hold above this valley. Because the low of the day doesn't need to break. Like I think one of my intuition that I think is true is once the opening pressure, the 9 a.m. starts threatening the overnight low, it's really got to bounce hard or else it'll give it up and test to lower. So I thought, I'll get into one here. Maybe this valley will hold and we won't even threaten overnight low and we'll come back up and start getting back over overnight high, which is just this green and red line, about 100 points apart. So I got into one here. I came a little bit lower, made a couple dojis. I got into another one here. And this is where actually, I think your lessons of where's your best entry come into play because I didn't really have to get in until we at least saw a doji. And it came well under my entry, a good 15 points. So could have made a better entry there. I got in some more here. And then we made this strong 5 minute candle. And here's one of those adds on momentum that I just think like I have this edge in that I don't know exactly how to write it down. It's definitely like good, strong candles, right? Like on the 2 minute chart here, you get this bull hammer and then you get a strong follow through. And I'm like, all right, that's candle number two. That's my confirmation candle. Like we've been way under on the 5 minute RSI. I'm at a level. I'm gonna add the rest of my position here. So now I'm in a total of seven with targets, just like kind of retracing. I'm like, here's the first one. If it just pops a little bit, I'll at least get one out. And I'm like near the middle point, this purple line, out, out, out. And then on my fib level, um, stuff like that, where ultimately I'm getting out almost all of them. I'm getting out six or seven pretty quick because I didn't like this downward move too much. But I think the opening pressure can rip it. We start ripping it. I don't know why the screenshot's so close, but same thing here. And then we just freaking rip it. I mean, all the way back up. I got out a bunch of them here. I guess I actually added a little bit more because this is more than seven outs. I probably added up to 10. And then just absolutely rip up all the way back to the gold line here, the fib level. So we did exactly what I was planning. I mean, we shied this gold, came to this 161, this red, and then shot right back up to the gold, which we shied earlier. We didn't push below this valley on the VP, which was as intended, and then ultimately we came back. Also, I just got out all of it here. So I thought this was dope because I mean I caught the downward move. I would have caught the whole thing, and then I caught the whole upward move. So this was awesome. So I was totally done this day as well.
I bet you your air high five like yeah, yeah, got that shit.
So, oh wait, was that?
Oh, I said I bet you you're high fiving the air on that one.
Oh yeah, I was losing my shit. I was like, oh my God. Because from I mean, the bottom, I mean, it was a 100 point move.
Yeah,
So this one micro near the top here it was $200. One micro.
nice.
Yeah, I thought that was sick. So ultimately that we actually right this is another one of those things I didn't list them all out properly at the beginning. I forgot I actually wrote a list because you asked me about what I thought helped a lot. Um and one of them was only trading in my certain time, which is
Mm.
like the morning. Um, I want to catch the potential of those insane opening momentum swings.
Well, the reason why I'm glad you said that because some traders trade well in high volatility. Some traders when it's really slow. Um, I'm in the middle. I can trade when it's slow or when it's fast, but that just comes with screen time, right? And that's why in the beginning when we first started, I would say, hey, trade after hours. Trade after hours because it's like in slow mo. So you can see the candle develop. You can see
Right,
the candle coming into your level. You can see the candle hitting your level. You can see the candle holding or smashing through your level a lot slower than you can during live. And then you take that practice and then figure out what type of style you like.
right,
But you need to get that screen time after hours so you can see all that development, when it slows down. Because when candles slow down after hours, it's painfully slow, but you're like, I don't know, it's like super slow mo. It's like minus 2x speed,
right. Yeah,
when it slows down. And then you're like, damn, this is really slow. So like that when you do it during live or during the open and you see that candles either flush fast or squeeze hella fast and then it starts to slow down. You're like, oh, that's that speed that I identified last night. And now if you can identify the speed coming into, pulling back into your level or or smashing through your level, you're like, okay, now I just gotta wait for that confirmation. And then you see the speed slow down and then speed back up to your level and then slow down at your level and then
yeah,
speed back squeezes back up in your
right,
favor. That's what you want to learn. You want to learn to identify that speed. Brandon would always say, hey, look for speed, look for speed. I was like, okay, what does that mean? And then I started seeing it when price action was either coming up, because on this trade right here, you have this little structure right there, and look at where it squeezed.
True. It's these structures I need to pay more attention to. I can see the ones that are close. It's that stuff in the back that
Exactly.
you're always pointing out.
And look at you right there. Look at right here.
Yeah.
It's the structure behind the leg. Even right here, look, right here. And then look at crazy, huh? And
That's
and if you train yourself to see these structures behind the leg, you're always gonna look left before getting in a trade.
yeah.
Because you should be looking left. Because history repeats itself. You know, it always tells you, okay, it squeezed at this level 3 times before in the last 3 days, right? So if it's above it and it's coming down to it, what's the likelihood of it squeezing? It's a good probability, but then if you have trend, and then if you add break a structure, and then if you add a fib or a moving average to that level, that gives you that squeeze point.
Yeah.
But yeah, just pay attention. These little structures, it'd be like if it gets past this structure, it might squeeze up because there's no structure here.
Makes sense.
Right? Because the structure it needs to attack is right here on the top. So if it gets past this and there's really not structure here, maybe right here in the middle,
Yeah.
maybe right there. But if you know if it gets above here, then the bulls are going to try to come in, get to this level. And if it gets above that level, then it's squeezing for sure. Tr Pay attention to dojis past structure levels because those could be squeeze points, especially if there's like a big wick right here. Sometimes I like to see a big wick because then if it goes down here and it hits that wick or it fresh lows it, then I know that 50% of that wick, if it gets back above it, then it can attack the structure. If it gets above the structure, it could squeeze.
Right. Makes sense.
But yeah, just something to pay
That,
attention to.
that. Yeah, I need to start mapping these out. That's actually I think that's out of I'm gonna have to rewatch this one. I'm definitely rewatching this one a couple times. Um, because I think there's a couple lessons here that I think I'm gonna take into account. I think I'm trying to figure out which one to put in which order.
Yeah, it's
Um,
whatever's closest and most relevant, right? You're not gonna go back up. You're not gonna pay attention. You're not gonna pay attention to this structure up here if price action's way down here.
true.
You got to take it in levels. Okay, identify a structure. Okay, there's one. There's many ones, I guess, but these are the beautiful ones. You want to see the clean structures. Remember what I said a couple weeks ago? The cleaner the structure, the better the play will be.
Right.
Like even right here, look, you see it right there, and then look, boom, rejection, down, continuation. So you got break a structure, right? Break a structure, lower high. You want to see a lower high off of there, and then continuation. And then pay attention to the bottom of that structure because if it doesn't break this structure, then it might change momentum back up.
Okay.
Hopefully, the next couple of weeks or so, we're gonna get into the break a structure course, and hopefully that clarifies any questions or issues that anybody has. There's, there's a lot of different ways to use it. This is just one unique way that I found to use it, and that's helped me tremendously with direction, with reversals, with bounce points, with um, momentum. You
Yeah.
know, yeah, definitely. Cool, good trade.
Okay. Thank you. Thanks for the notes as well. Yeah, definitely probably a couple times on the rewatch. Um, do these. Damn, I'm actually realizing from the labels, maybe I should have picked out some more. Where's my actual entry here? Picked out some more lost trades. So damn, these screenshots are not good. But do they correlate? Yeah, so this is actually my trading view what I'm looking at. These lines, so all the lines on all my charts are pretty much EMA based. These lines, the green, orange, and purple are I pretty much use them like the same way as moving averages, but they're based on the MACD specifically. And then just RSI and then MACD as well. Um, and this is actually the short setup I was talking about earlier. It's kind of actually a comparison to a short setup. So you got the orange, then the green, then the purple, then the blue in terms of like strength. So here's like the short setup on the this is like a 4 hour MACD, and the green is like the one, and the purple's the 15. So this setup that I like is basically the middle. It's a three moving average setup, and you get the middle one comes under, or the smallest one comes under the middle one, and the target is a back test of the middle one to then target the bigger one. Hopefully that makes sense. I mean, really, it's a three setup cross back test. Um, anyway, and then this is so that's the four, the one, and the 15, and this is the one, the 15, and the five. So basically, I took this short here. This was at night. I took this short here with like two contracts. And because we got, the five came under the 15, back tested the 15. So my target is the hour.
Hmm.
This is like one of the only like kind of really serious, I guess, moving average kind of setups I will take a lot. I mean, it's pretty simple. I don't know, pretty step. Moving average people are probably like, yeah, you get a cross and a back test. You target there, I mean, what's the big deal? So this is that short here. My screenshot is kind of shitty. Unfortunately, it was really late at night when we finally hit that target. It was like a perfect tag at the target, near all the way near midnight. It's like 11:45. So yeah, this just ultimately worked out. I mean, this I'm gonna snap back to this picture. We got the back test to the 15 here, and then the snap back here. That's the back test here, and then ultimately we came down right and just hit that short target. So
Nice.
thank you. This is like I love this one. This really annoyed me on the day we washed this week. We had this setup like perfectly. Actually, it was the 4 hour, the 1 hour, the 15.
Hmm.
The setup was exact what it should be, and then I didn't take it, and I was like, no, because I was waiting for payouts. It was probably for the best because I had had a really big day before, and I one of the emotional things is after a really big day to maybe not even trade the next day. Here's a short. Um, I don't really like that I managed. I don't know. I don't know why I managed it so much. Um, but I don't know. Ultimately, it did go down. We broke the high like this. I was in micros. I wasn't in too many. I was right on the direction and caught a lot of movement. Um, so I don't know. I don't really know what to say about this one. I think my management wasn't that great. I think I was shorting a rip. And ultimately, my direction was right, but I mean, I got in around the 50. I added a bit on this structure and added more up here, but I don't know. This one was a win, but it was a big win, and it felt that I felt great, but don't know if I don't think it was that great of a trade. I
Well,
guess directionally it was.
the only thing that I see is it's like a rising. I wouldn't call it a rising wedge, but it would be right here. Fail point right there. Enter short.
Yeah.
Um, and you had resistance right here. That last one looked good because it was a fresh high dump.
I
This
mean, the
one,
last trade or the last
yeah,
ad?
the last trade. Last trade, watch, go back to the other one.
Like this
Yeah,
one here?
yeah, yeah, yeah.
Was it a
No,
trading view
the
one?
short. Yeah, the trading view one.
I think I closed it. What?
The one you were just recapping before this one.
Yeah. Oh, here we go. Yeah,
Yeah,
this
see right here. Go back. See how it's a base right here, and then we got the fresh high, and then dump.
true.
So that one was good. This new one that you started recapping. I don't know if you had go back to the other trade, to the one that you were just recapping.
Okay. I'm also I got also a cat in my hands. They shit themselves. But anyway, here's
Yeah,
this one.
yeah. I mean, because this is what's up here, the 5 minute. Oh no, what's the top one right here? What's that?
Which one? That
Oh,
is
that's
the
a 15 minute, huh?
yeah.
Well, that had a lower high, so you were good there. See right here.
True. Yeah, that's why I had confidence in it on the higher time frame. But I think the entries were just left a lot to be. I mean, I guess it wasn't too bad. Maybe I should have spread them out farther. But
I mean, and you added, and then you added again. I
yeah,
mean,
I was just like clicking it. I was like, I can get up to 10 and I can just I'm pretty sure it's gonna go down.
yeah, that was like more of a gut intuition type of play.
Pretty much.
Because, I mean, usually when I see volume profile where it's fat up here and nothing down here, that's when I tend to say like price action will eventually come down here. Because if you look at volume profile at the end of the day, it's all full
Right.
right here. Usually what I look for are these little valleys, like this
Right.
one, that one, that one, that one.
Yeah.
Because price action will come down and fill those. Fill all those up. Hell yeah, that was a good trade. Can't really add much other than I probably would have stopped out above this structure right here. Hard open close and you never got it.
Right.
Especially if I'm adding here and here and here. I think what you took this trade is because the moving averages were kind of like sloping down and you already had broke them and
Yeah.
then retested. I don't know. Maybe.
I
The
mean, I don't know.
RSI on the 1 minute was kind of diverging because this was sideways and then this was diverging down.
Yeah. Yeah. Hmm.
But yeah, maybe some
Either way.
things.
Either way, it definitely worked out. And because my risk was small, my emotions were managed.
And
I could
that's another good thing, when you're in micros is like your emotions, you're not freaking out. If you're in NQ on this, you probably would have blown up your account or been like negative 1,000 or
right.
something. I don't know.
Yeah.
But yeah,
Okay.
like I said,
Yeah.
15-minute divergence. You had that falling wedge here. I mean, rising wedge on
Mhm.
what is that time frame? 1 hour?
Yeah. True. Yeah, in this 1 hour.
Yeah, like I said, the only thing I could add is your stop out would be a hard open close above that if you entered there.
Right.
'Cause that would be your resistance. And then you have that right there.
Right.
Boom. Prior support becomes new resistance. And it's only on the second time, right? Because you have that level right here. So this is first, second. Usually the third or the fourth time, it'll squeeze up through it. I don't think it was that bad of a trade.
Yeah, no, no, I like the idea of it. I just think the execution.
Yeah, cool. Well, well, let's start a small count challenge. We started it today technically, but we'll go for tomorrow. And the whole goal is to pass it, by the time just using 3 micros for me, hitting 250 to 300 bucks a day.
Yeah.
Let's see if I can get 10, if I can hit, I could, with the goal of passing it in 20 max, minimum of 12 days is not to rush it, right? 'Cause I'm not going to rush it. I just want to consistently hit two to 300. Once I hit my two or 300, I'm done. Not trading anymore. If I hit it in one trade, awesome. I'm done. If I hit it in two trades, even better. But I'm not going over 4 trades. Um, yeah. So
Yeah.
3 micros, 250 daily goal, uh, drawdown 150 or stop loss 150. Um, what else? Two max red trades. I'm done for the day. And then yeah, that's it. We'll get started. I don't know if you have any rules that you want to mention. Um, but yeah, those would be mine. I'll keep posting them. I'll keep posting my trades. If anybody knows how to get rid of the P&L on Top Step X, greatly appreciate it. Let me know. And then we'll end it there. Well, thanks for putting in the hard work. Thanks for stopping by every Friday, sharing your trades. I know that's not easy, especially when they're red trades. But what
Yeah.
me and Brandon always say is you learn the most from the red trades.
Right.
You know, like a like the acronym that I like to use is FAIL, right? FAIL is first attempt in learning. That's what it stands for. And then my second acronym that I now started to like is fo focus. If you write it out, focus is focus on one course until successful. Focus on one course until successful.
Yeah.
And I said, break it down. If you're brand new starting, start fundamentals, learn candle development, learn break of structure, and then learn trend. And then stack that with your strategy.
Right.
And, and you will be consistent. You'll be set to go. So we'll end it there. And yeah, until the next, we'll look for the next Finding My Way contestant soon. Maybe in a month or two, we'll start with that one.
That'd be fantastic. Thank
And then the next one, I want you to start critiquing. I want you to start, because the way that you retain knowledge and you learn more is by teaching somebody, helping somebody else out. And
Let's
if you
go.
can, that'd be great. Not, I will still be here. You join whenever you want. So.
That sounds great. I
Hell
love it.
yeah. I'm glad you were able to find your way, bud. Have a
Thank
great
you.
one.